Hey, it's Clay Trader, and this will be a video chart on ticker symbol VRX. We will take a look at the 30-minute time frame. Real quick, what do I mean by 30-minute in case maybe you're new to charts? Instead of each one of these candlesticks representing 1 day's worth of price action, which is what you would normally see, each one represents 30 minutes. So while this may look like a few weeks worth of time, it's actually just the past few days broken down into 30-minute time slices. I did this analysis yesterday, so that's where those red and green lines are coming from. And just want to quickly get things updated, as I had quite a few questions on it. Obviously, yesterday, the price just had the crazy final 30 minutes, which is represented, by the big green bar right there. And then you can see all that volume had surged in. And then today, the price did pull back. So at this point, it's really kind of a matter of strategy. What do I mean by that? Strategy and perspective. Well, if you are a day trader and you bought right there, or maybe you bought right there and you were hoping to sell within, 5 seconds, then yeah, for you, the chart's looking kind of rough. But if you care about the big picture of things, then everything is still perfectly fine. The bulls still have plenty of opportunity to build a higher base, put in a higher low, and, in other words, go through a healthy consolidation. Which brings up, well, how are you defining healthy consolidation? In my mind, as long as the price stays up above that $20 mark, then that is a totally healthy consolidation. Why is that the case? Well, I'm not going to, beat that dead horse, considering I went into detail with it in yesterday's video. So if you're curious, you can go in the video archives and watch the VRX video from November 1st. But $20, like I said, as long as the price stays above that, then in my mind, this is a totally healthy consolidation. Again, from the big picture perspective, if that's your, strategy and you care about the overall scope of things. Now, in regards to levels of resistance, I did talk about that in yesterday's video, but what I want to do is just kind of bring one down. Yeah, this level up here at 24.75 is still resistance, but I wouldn't exactly call it relevant right now, given there was the pullback. And even this level up here at 24, yes, that's a level of resistance. But before you really even start to talk about doing battle with that 24-cent area, I think the first initial hurdle that needs to be crossed is right there at about $22.35, give or take right around that range. You can see quite a bit of history, right around that zone, knocked it down, basically exactly knocked it down right there. And then you can see exactly knocked it down and exactly knocked it down. So 22.35, if you want to call it 22.50, I wouldn't argue with you about that. But yes, $24 up there is a level of resistance, and yeah, that's probably the exciting one to talk about. We're going to do battle with 24, push to new highs. But before you start talking about that, other bridges need to be crossed. And, after today's price action, it seems that first bridge is right there at 22.35. So all in all, the bulls still have a chance to build that higher base. So we'll see how this one continues to unfold. One of the most popular questions I get is, hey Clay, how do you find the stocks that you trade? So what I've done is put together this free resource guide where I talk about the tools that I use to locate stocks that I find interesting and think may have potential. So if that sounds like something that could add value to you as a trader, then by all means, click right there to get access to the guide. The guide itself is very short and to the point, and like I say, it is free. Thanks for watching. Have a good one.